M&A activity is back, baby.
After years of pent-up acquisition demand that's been sitting on the sidelines, M&A activity has really heated up.
The end of this year is looking to be a boom time for M&A, and because of that, we think that we have found one specific company and also a broader trend that we think is going to be a huge opportunity for investors to make a lot of money today on the Altimetry Authority.
Let's talk earnings and favorite pastime.
So let me just say, earnings
liquidity
why
of Wall Street.
It's
It's
why do they
2.5x.
Because their compensation goes up.
Wall Street's wrong again.
So, right, when you look, there's a story that certainly in the headlines, but does seem, Joel, like nobody's actually talking about right now, which is we are really starting to see a merger bonanza pick up. Just everybody for context here. I mean, we had back in late October, $80 billion worth of transactions happen in one day. And then in September, right, obviously, we were talking about how even though everybody was griping at M&A, we would see a $1 trillion haul already in terms of M&A activity for the year. And then, I mean, just look at this, just daisy train of transactions, right? Novartis, right, buying Avidity for $12 billion. Thermo Fisher spending $10 billion on Clario. I mean, even Goldman Sachs was getting in the money, not as an advisor, but paying like $2 billion for an ETF acquisition. And then, right, most recently, right, of course, you have Marvel buying Celestial AI in terms of, right, basically jumping in and saying, hey, let's expand the space. And I mean, in Joel, you look at this, and I think, Joel, right, there was just a very important other one who was just announced too, correct?
Well, if you like streaming, Netflix and Warner Brothers, which means HBO Max, so that's the #1 and the #4 streaming services combining. And let me just say, a whole bunch of companies, sub 1 billion, 2 billion market cap that are getting snapped up left and right. It is the M&A market we expected as things have settled down regulation-wise, and there's a lot of catch-up companies are doing to snap up other firms.
Yeah, exactly. I mean, and when you play through it, it was interesting because the table has been set for this, everybody, pretty much from the start of the year. Trump very early on in January put out executive order was 14192, right? And what this was, which the idea of unleashing prosperity through deregulation. And the whole entire idea of this is how do we cut red tape to make it easier for M&A to happen? It's a big, big part of it. But it wasn't just that. I mean, you also had the DOJ and the FTC, right? The two big federal regulators who either say yes or no on M&A, saying, hey, how can we make it easier for people to close acquisitions? Instead of saying no, which was the Lena Khan route pretty much constantly in the Biden administration at the FTC, it was, let's talk remedies. Oh, you Warner Brothers are going to be acquired by Paramount. Well, here's the thing. In these specific areas, you two will have way too much of a dominant share, or Netflix, I should say. You're going to have way too much dominant of a market share here. So instead, let's have you just sell off that little part of the business or commit to actually have some extension. And that's important because that meant M&A could go way far more easy. And then, of course, you had one of the writers of Project 2025, Andrew Ferguson, right, from Heritage, come in and basically take over the FTC and basically say, hey, we're going to do this. But everybody was interesting was, even with that, what we saw in the first half of the year is we didn't see that M&A surge happen yet. If you look here, what these gray bars are the M&A activity each month all the way back to January 2022 through June of this year. And you can see in January, February, March, really we didn't see a lot of, in April, we didn't see a lot of M&A. But the reason why was because there was just a lot of uncertainty out there, right? Even though the administration was cutting red tape, we were also unsure of where we're going to go from a broader regulatory perspective, where the Trump administration's priorities were for clean energy versus not. With the tariffs and everything, every single CEO said, whoa, wait. But what started happening in Q3, and this is where we got to that $1 trillion number and all these headlines that we just talked about, was we started to see deals pick up. What this is just for context, right? Joel, you talked about small company deals, but these big company deals, everybody, these are transactions in excess of $10 billion. In Q3, we saw the highest rate of M&A for big M&A that we'd seen since early 2022 before interest rates took off. And because of that, we are now, for the first time in 4 years, we have the highest level of M&A we have seen in the U.S. ever, right? So, and by the way, this is through early November, the last data that we have that actually we can hang our hat on. Through that period, M&A in 2025 in the US has exceeded 2021 levels for the first time. And we have a whole entire, month and a half to go. And everybody, for context, this is really important. The end of the year is always a boom time for M&A, because what happens at the end of the year is you have all these people who are saying, okay, hold on, do I want to have the tax implications of whatever's going to happen next year or this year? Do I want to, if I'm a company and I want to make sure that I can, I'm going to be set up for next year for earnings, everybody scrambles, and also the investment bankers scramble to be able to make their bonuses, to be able to scramble to get things done here. And so we're going to see this have a really, really strong final kick to it. So, right, Joel, you and I thought, right, with all the boom that we see coming at the end of the year for M&A and the boom that we've had so far, we know that there are going to be some pretty big winners on this. And there's one place that we thought was really interesting. You want to take everybody through why Lazard, the investment banks, might be an interesting place to pay attention to for this?
Well, most companies still have a fiscal year that fits the calendar year, overwhelmingly. And most companies, because a lot of times they want to juice up their earnings at the end of the year, most acquisitions occur in the second half of the fiscal year of the parent company, meaning the second half of the calendar year. And most of those occur in the fourth quarter. This year is even more pronounced because there was such trepidation in the first 6 months of the year because people weren't sure about tariffs and new presidency, new regulations and whatever else, and who's going to be in what job and where. And so now, we're seeing this boom in acquisitions occur. Who makes money on that? The bankers. I would say glorified real estate agents. That's probably rude to real estate agents. This is speaking as a reformed banker. But anyway, the investment bankers do get a commission. So the bigger the dollars, the more the transactions, the more the bankers make. And so Lazard is one of those. We're showing a return on equity because return on equity is how you should look at a banking business and brokerage businesses, which is what they are. That's their GAAP number, return on equity. The blue is the uniform accounting number. And the uniform accounting, you see a much higher return. There's a lot of reasons for that. Some of it is special items and one-time charges that flow through GAAP accounting that we think don't represent a good basis for forecasting the future. And so this bank really does make killer returns, 50 to 100% return on equity. And in 2024 was not a bad year at all. What Wall Street is expecting, then this surprises us, is that the return on equity of this firm is going to actually fall over the next 2 years. Now, this is Wall Street analysts doing forecasts on another Wall Street firm. So take it with a grain of salt from that standpoint. But we are aggregating all the Wall Street analysts that are covering their Wall Street, right, peer/competitor Lazard, and they think the returns are actually going to fall, and that the market, to get to current price, is that returns will fall to a level that's lower than anything that 2025 would truly suggest, given the last quarter that we're going to have, and also much less than even they've had in the last 5 years, to include 2021 and 2022. So when you're looking at Lazard, the expectations are very low. That makes the stock look very interesting, because if we are seeing the banking business boom, that's not just going to stop this year, but it's going to continue to next year, because we're expecting interest rates to fall even further. We're going to see a new Fed head come May 2026, appointed by Trump. We know Trump and the administration want interest rates are going to go further. So lower interest rates means cheaper financing, which means more deals. Why wouldn't 2024's number for Lazard continue to 25 and at 26? We think it would. That makes the stock look really, really interesting and cheap relative to the real performance they would likely have.
And yeah, you look at it, right? Everything you said, Joel, and on top of that, we got, again, everybody, 4.5 years of pent-up M&A activity demand. Really, you can argue 5, between lack of deals in COVID, then the Biden administration, then the first half of this year. And add that to everything that Joel just talks about interest rates and everything else. And so it's wild that Lazard, when we look at the stock price, Lazard's stock is basically flat year to date. It's like nobody's paying attention to this. But to us, what's really interesting actually goes even beyond Lazard. We think, because we are in such a ripe period for M&A activities right now, there is 1 or 2 investment banks we think really could benefit from this. But this is the perfect environment to be able to unfurl something that we do very, very well here at Altimetry. And just for context, everybody, in the last 5 years at Altimetry, we have identified 22 companies that then went on to get acquired. And we have a phenomenal track record of strategic acquirers that we identify and understand the capital markets. And so what we did, because we know that this is a period of massive opportunity for M&A. We actually just put together a special report on this, which you can get at what we call onedaydouble.com. It's a special report that we have access to for a limited time where we actually talk about some companies that we think are really compelling potential targets for M&A, some really great strategic acquirers that are going to benefit from this boom, and also one specific investment bank, just like we talked about with Lazard, that we think is really interesting. And so if you want to know more about this topic, because you see what we see, which is we are about to see a boom in M&A, go to that link, watch the special report, and you'll find out more. And that, everybody, is this episode of Altimetry Authority. Thanks so much.